Welcome to CoBB, Conversations on the Business of Brands with Sudeep Chawla and Raghavan.
Okay, so Sharan, we've spoken about your famous The Long Chew, I think couple of times earlier as well. And I see that you have listed it as part of the topic again today. Some short-term memory loss or something else?
There was this article I read in the Economic Times last week or a few days earlier, which said that regional FMCG brands are slowing down. Some are even declining. And this is exactly the result of the long chew vicious cycle. And I think it's important to remind our listeners about the perils of this kind of a situation.
Yeah. I remember having seen that article as well. Many of them had slowed down.
Few of them were declining, yeah.
Yeah, few were declining. Okay. So you think that this is connected to long chew?
Yes. And it's alarming also.
Okay.
Because growth is the only way forward for these brands, these FMCG brands, regional ones. And large national brands like Unilever, Britannia, Marico have massive revenue bases, as in they're large already. And if they grow at about 3%, it is still a significant amount of value upside. But for regional brands like Balaji, MTR, Risk Farm, they are much smaller businesses in comparison. They are sub 5,000 crores. And when their growth slows from, say, 23 to 10%, they are actually losing any advantage. I wouldn't even say they had, but they thought they had.
Okay. But tell me, usually when we look at brands, wherever you and I have worked, we always say that faster growth, slower growth are all parts of, a particular business cycles, very long business cycles of any brand. And therefore, shouldn't that rule be applied to these guys as well?
If you look at it, Sudeep, this will be the norm for the category at times, sometimes the whole industry. When the large guys are growing and the small guys are not or slowing down in growth, it means these brands actually thrived not because of something that they did, but because they had the advantage of the commodity prices. And inflation basically favored them to grow. But when prices begin to stabilize, these brands struggle to sustain their sales because the large guys are coming back to take back the share that they lost to you. So what this means is the growth wasn't sustainable. It wasn't structurally built. It was just something opportunistic that fell in their lap by most means. I'm not saying nobody did anything good, but most occasions, it is something that just came by their way.
Okay, so they were riding the wave, more or less.
Yes.
And therefore, let me bring it back to where I started from. And therefore, how is it connected to the long chew?
So the long chew is when the business feels like it's running on a treadmill. You are working hard, you're getting sales also, but you're never really moving forward in business. So most regional brands operate on a sales push model. And they believe this is what is working for them in times like this when they see this growth. And they give higher margins to distributors, they give credit to retailers and discounts to consumers. And they create this vicious cycle where cash flow becomes a constant problem. And they are unable to invest in building their brand, business, or anything. And actually, what makes it worse is that this business that they're getting is only a transaction. It is not something that's guaranteed to repeat. And every time they're going to have to start from zero. It's not like I did 10,000 crores this year, I'm going to do 11,000. No, you have to do 10,000 plus 1,000 crores next year because you have not built any residue value with your push sales mechanism. There is no pull for your brand.
Unless you indulge in, work like, say, Nirma. What Nirma did to Unilever. Possibly they were able to ride the commodity wave, get their prices really low. But I believe that what you're saying, they were not just push-based, they were accessibility-based.
They were accessibility-based and they communicated value. So look at the amount of, say, while you may not think of Nirma as a great brand, they built themselves as a value brand.
Correct.
And it took Unilever years and multiple efforts to try and match that value with Nirma. So that was still a brand building.
True. Okay. So now you were talking about push sales. And so therefore, naturally, it would lead to some temporary spikes here and there, right? And like you were saying, during inflation or when prices go up, a lot of these brands get traction, right? And we've read about a similar traction that is seen by private labels in the West.
Right.
So is this a parallel example?
Not exactly, because see, first thing is that it is a temporary blip at the end of the day. But like the private labels in the West, the regional brands also benefited because the national brands had raised prices and people were going to the slightly lower price products. Now, what happened in the West, though, is that these are backed by retailers. These are retailer-owned brands. So they own their supply chain, they have the advantages. And what they got to do is that they were not just they're no longer rather just offering the cheaper option. They are also playing in the premium segment, and they're doing their best to keep the brand that they're building away from the store name. And in fact, it used to be called Lidl's snacks. It could be called Tesco's for chips. It's no longer called that. They have their own brand that they're building. So they are also investing in brand building and playing to the consumer to know what to go after. And when inflation cools down and the big brands adjust, our regional brands will lose share, while them, because of the retailer backing and the brand building that they've done, they will not lose out as much as our regional brands do.
Okay. Fair. So, now that you've painted a good doomsday picture for all the regional brands, what's the solution? How do they find their way out of this long queue?
It's simple. It's not easy, but it's simple. They've got to move from a push sales situation to building pull for their products. They must focus on building brands. And I don't mean just designing a nice logo and running ad campaigns. They need to get their positioning clear, know exactly what your product is, who your product is for, what is it doing for them, the promise to the consumer. How are you building trust with the consumer? How are you engaging with the consumer? And demonstrating long-term business discipline. Basically, stop giving unsustainable credit and discounts. Today, when I tell this to any of my clients, they hate me for saying this, because this means they believe this will just destroy business. But it's destroying business anyway.
Okay, fair. I think and we're back to that same one, Sharan. When you talk to anybody and you say, please build a brand, the first question will be, how do I get the money to build the brand? There's no money. I'm already spending all the money that I had.
Okay, there are two answers to this. One is that when you stop giving discounts, you get some money back anyway. But the biggest misconception, like we've spoken about on the show a lot of times, in fact, that was our first episode where we said brand building does not require money. Advertising does.
Yeah.
So brand is built with every single business decision you make on your packaging, on your pricing, on your distribution. What experience are you delivering to your consumer? If a consumer has recall for your brand, trusts your brand, and is able to buy your brand, that is brand building. Advertising just amplifies and accelerates the cycle faster if you do it right. But the rest of it does not require as much money as you think it does.
Okay. Fair. So being thoughtful about what they're offering to the consumer and then building maybe value in every aspect of that offering is what you're asking them to do.
I think you said it best in one of our early episodes, saying the brand starts getting built even before you think about the business.
Yeah.
If you can, because that has got so much truth to it, to say when it is the soul of the business. Right now, you are building structures without soul in them. And that is why they are not sustainable. You got to think. I think there's something also we've said on the show, right? Said whether you're in the product business or in the service business, you are in the experience business. How many of us are focusing on delivering the experience to the consumer?
Experience. Okay. Fair. Now, got it. So that's a valuable advice and something to ponder over for regional brands. We earlier spoke about the private labels in the West. Now, what is it that our regional brands can learn from them?
See, like I touched upon earlier, the private labels started, they were called private labels because they started as being the cheaper alternative to the branded bags. And that is when they were possibly comparable to the regional brands that we have today. However, today they are called store brands. They're not necessarily private label because the brands are owned by the store, but it's not necessarily in your face. And they have figured out the category play. They've strategically positioned themselves saying, I'm not just going to be the cheapest option. I'm going to also play in the premium. I might be the cheapest premium product you can buy, but I'll still deliver a premium experience to you. And because they have their retail structures in place, because they are retailer-led, their distribution is taken care of. It's one less worry to a large extent, but they still have the planogram to fight for with the category and all that. But those are smaller internal discipline issues. And what they've also invested in is building trust over time with the consumer by giving them the choices and not necessarily about being a substitute to the larger brand, but competing with the larger brands, taking on the larger brands. Now, what do we need to do? What do our regional brands need to do? One, position yourself. That's the beginning of brand building, right? You need to know where in the category you're playing. You can't always be the cheapest, or you can't be the most premium and say, I'm going to sell only here and not scale. You got to figure out who your customer is, what your size of price is, and figure out what your narrative is. And think beyond price wars. Stop giving discounts and depending on discounts to drive sales. And I'm not saying just consumer discounts. Retailers, distributors, everybody. You got to get discipline in business for your cash flow management. And third is something that's often overlooked when we say a lot of people are afraid of GTM or distribution. These regional brands have distribution. But the problem is that distribution isn't efficient enough. So they are more focused on expanding geography of distribution than actually servicing the market they've acquired. So once you open a store, it takes you about 2-3 visits from the salesman to even open a store. And then if you don't service that store properly, you are not going to get the respect from the storekeeper or the retailer there. So if you can ensure right distribution, good distribution and service levels, that is important because the private labels of the West don't have this issue. They're retailer owned. Here, you've got to make the retailer feel like he owns your brand by delivering that level of service through your distributors. And you can always expand your market as you go. That's not the most important. Servicing the stores you already opened is more important than actually acquiring more stores.
I think that's a fair suggestion, fair set of suggestions actually. A little bit of a rewind to an existential question.
Okay.
I know that at Vitral you guys work with a lot of smaller brands, helping them take share from larger FMCG ones. Why do you espouse this cause and why are you so passionately talking about it today? Apart from obviously the fact that they are paying you, they pay you when they avail your services. Otherwise, fundamentally, why do you think it is important?
This is a very philosophical answer also, right? But this is also the why of what we do at Vitral kind of is born from. To say, we worked with multinationals, we worked with the large corporates. I'm sure you've seen the graph that's gone about, right? How many snack brands in the world are owned by just 4 or 5 companies in the world.
Yeah. The same is for media.
Yeah.
Same is for media.
Media, FMCG, all categories in FMCG, right? That's how it is. The regional players have very little role to play. And wealth remains concentrated in these large, big corporations. And the family businesses, the independent-owned businesses, have a soul to them. The large corporations are corporations. And if the regional brands don't scale, the FMCG landscape becomes a monopoly or an oligopoly at best. And what does this mean? This means consumers have fewer choices. They have illusion of choices, but they don't really have a choice. They have smaller suppliers getting squeezed, like what's happening with Walmart and all, right? The distributors get squeezed. So the entire supply chain gets squeezed. And wealth gets locked in the conglomerates. So who is able to make money selling on Amazon today? Not even Amazon for that matter, but nobody is making money selling on Amazon. Very few people are. And we need these regional family-run FMCG businesses to survive and thrive, not just for their benefit, but for the economy as a whole. Because we are a land of entrepreneurs. We have far more entrepreneurs than anybody, but we seldom build brands. And that is why these businesses don't last beyond a generation or 2 at best.
Fair enough. I think sounds like a socialist pitch as well.
With capitalism.
With a rallying cry for capitalism. So this, I think, possibly could be the next way forward for CPIM to come to come out of their oblivion wherever they are. Okay, so fair. So, and for that purpose, the smaller businesses, the regional businesses need to survive the long queue.
Absolutely. And the only way to do that is by building your own brand. It's not about giving discounts. It's not about your short-term tactics. It's real brand building. And if you can push advertising to the last, even better.
Okay, excellent. So we've given multiple suggestions to the small businesses in this episode. You started by saying that they must focus on brand building versus investing behind push sales, or rather discounting sales by offering discounts to intermediaries, etc. And only by that will they be able to they will be able to build on the previous transaction rather than starting from zero.
Absolutely.
Right? So if there is one message that you want to give to small business owners, apart from the fact that you want them to work with Vitral, what would that message be, Sharan?
Do you need any more message other than that? Just to come and work with Vitral. See, but a lot of times the businesses that I speak to and work with are enamored by the volume of sales that they're able to get, and therefore are willing to do it at a cost. So it is not about the volume or selling more and more, because if it doesn't deliver value for the business, then what's the point of it? So you need to focus on creating value. If you don't, then every sale resets you back to zero, and you have to start the mountain climbing right from the base, and that is the long queue. But if every sale builds trust, builds value, builds connection with the consumer, then you're creating a real brand. And that is how you grow at an accelerated pace. That's all you need to take away from this episode today.
Excellent. Very nice. I think this has been a great, great episode for me to listen to look at a perspective from a smaller brand or a brand that is still trying to take share. It is riding the wave and wants to be hopeful about its future in the long run. These are the ways in which it can invest into its business and make sure that it lasts while it is able to exploit the entire opportunity and hopefully survive the long queue.
Absolutely.
Right? Excellent. And to our listeners, if you are a small business owner and you want to talk about your case, what are you doing to survive the long queue? This is an invitation for you to maybe put your story in the comments, and we'll be very happy to talk to you and hopefully pick your story up and take it to many more people.
Thank you for listening to CoBB, Conversations on the Business of Brands with Sudeep Chawla and Sharavana Raghavan. Subscribe and learn more at cobcast.net.